The digital world is ever-changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cybercode has been providing financial training and information technology solutions for established clients. Cybercode is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cybercode endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services, curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, a very good evening, ladies and gentlemen. Thank you for tuning in for this Wednesday evening webinar session of the webinar title, How to Spot Explosive Winners in the Shaky Market. Like now, by keynote speaker CKE, the co-founder and the chief trader at Asia Chart, and also associate trainer with Cybercode. Now, of course, for those who are following through his company Cybercode, we get to know that we start off business since 1996, like the video we just played earlier on, right? And we're providing financial investment courses to the retail individual. right? And then also during the COVID time, we also have IBF courses to be so-called conducted by the various trainer, and of course CKE also one of the trainer also providing this uh what do you call that session of this of IBF courses also. Now, do allow me to do a short intro also for our keynote speaker today, CK. Now, in this CK, basically, he the industry in the industry in Singapore is more than 2 decades, right? And he's using the very unique tool of CFD and warrants to maximize return. So, with this vast knowledge of this trading experience with him, and therefore, I think he had been trained thousands of his students, right, during the heyday, and then of course or emphasize on using the market behavior to align with his trading so-called success as well as a strong money management. Now, with that, also has been invited by the local radio station, like the media outlet like Bloomberg, Channel Asia, to provide its market insight. So, of course, a lot of things to learn from this short 2 hour session. But of course, indeed, we want all of you here to also to be more interactive or to learn more, right? As more question raised during the 2 hour short session, you of course you learn more also at the same time, isn't it? Right? Now, so please feel free to post your question in the chat or Q&A. So in the appropriate time, of course, speaker, this CK will provide you the reply. So without further ado, let me just cordially invite CK to kickstart the session. So over to you, CK.
All right, thank you, Andy, and welcome everybody to this webinars, this evening webinars. Now, a lot of investors, especially after this recent sell down, were actually surprised, and I'm not too sure. Some of them are shocked as to what they're supposed to do. To me, this is very natural one, nothing unexpected. And in this presentation, I'm going to actually share with you some of this insight. And sometimes to us, we love sell down one. So you got to actually really change your mindset. Sell down is really a setup for a bigger profit. No, I didn't say in jest. I will just show you some example as present. And towards the end of the section itself, I'm going to show you how I actually support my students. I thought before I just go further, a brief intro about myself, so you know where I'm coming from. Who am I exactly? I'm just a retail investor, a private trader, very much like yourself. So I'm not a reminder, you don't trade with me. I'm not a fund manager, I don't collect money from you. I'm not a prop traders, I still got to pay commission when I trade. So I'm just a retail investor, very much like yourself. Now, I began serious investing in the market only in 1998. Okay, prior to that, I left everything with my wife. I left everything with the professional, so-called the money manager and things like that. So especially my wife, actually, she worked in the bank, all right? And she have access to all the information that is required. Now, remember in the 90s, there's no internet. So informations are generally filtered, so-called quality information. So I thought it should be in good hand. In 1997, Asian financial crisis, she actually lost a lot of money, couldn't sleep at night. So because she couldn't sleep at night consistently, so I was a bit curious. And finally, she actually told me she couldn't sleep because she actually lost a lot of money. So I said, what about the expert? You get the information from the expert, right? What about them? He said they also lost a lot of money. I said, how can that be? If the expert cannot make it, then we are in serious trouble, right? Isn't it? So I said, cannot be one. So in 1998, I made a commitment that I want to study, right, the market and relying on myself to make the necessary decision and not influenced by any of the expert. So that was my commitment in 1998. So at that time, I eat, sleep, I go to the washroom with a book on investing. Everywhere I go, I carry a book. Everywhere I go. So I'm committed to read as much as I can. So I'm a slow reader actually. But anyway, in that year itself, I actually read more than 30 books. More than 30 books. And I also discovered something, which to this day, I still find very surprised. Being normal cannot make money in the market. I repeat that, being normal cannot make money in the market. So if behave normally, logically, very rational, cannot make money. Market has its own language. So that was my root discovery. I also discovered that time 75% of the fund cannot beat the market. 75% of the fund cannot beat the market. So if they cannot beat the market, then why are we actually parting money with them and ask them to manage our money? All right, so I find it very odd. So that was my root discovery. I regret I didn't start earlier. Why? Because I missed the dot-com bubble. So during that time, I was still learning. I see the stock actually going up. I was trying myself. make some profit, but it wasn't really consistent. So I began to make money consistently only when the bubble burst in 2000. So I began to make money consistently by shorting the market, which is quite unusual because most people make money by going long. I make money first by going short. And I also made a commitment at that time. When the market is up, I should be happy. When the market down, I should be equally happy. So I made a commitment. So to me, end of the day is just a normal thing in the market. All right. We don't have to be too concerned about that. And I'll share with you in my presentation. In 2006, I actually founded this company, Asia Charts. My objective was try to fill the gap in the industry in terms of quality education. So there are a lot of smoke out there. So I try my level best to tell you the truth about investing. So that was my objectives. Together with my associate, we have trained more than 10,000 students in Singapore, Malaysia, Indonesia, and Vietnam. All right, these are physical events which I actually do. Now, this is not to impress you, just to impress upon you. I've been around for quite some time. This is the first time I got featured in Straits Times. That was August 08. Now, we don't offer get rich quick scheme, but live our principle in teaching what real trading is all about. So when a journalist interview me, first thing I tell them is this, because this is a common mistake. People like this get rich fast one. So it's a common mistake. My side is very important. Subsequently, again, I was featured in Straits Times. This is half a page of Straits Times. And I don't know who recommend to the journalist. He call me up, interview me, go to the hotel, take photograph. Before I realized he appeared in Straits Times. Half a page of it in a money page. Now, let me just blow this caption for you to see. People looking for get rich quick scheme must not turn to trading, as wrong mindset can be very dangerous. So we tell people up front, trading is really a skill set. All right, just for example, if you cook very well, that's a skill set. Do you spend some time? Of course you have. All right. If you play basketball very well, is that a skill set? Yes. Do you spend some time? Of course. Do you practice? Of course. The same thing. Investing, trading is the same thing. It's a skill set which you can learn. All right. And you what? Practice and you hone your skill over time. And once you enjoy the process, you look forward doing homework. Okay. Just as for example, if you love playing football, you love going for training. Is it correct? Same thing here. You must enjoy the process. This is especially so in investing and trading. You must enjoy the process. If you find it a chore, all right, you're just looking for tips, you will never make it one. All right, you must enjoy the process. Okay. Subsequently, I got featured in Business Time, regional newspaper like Monipo, Xingzhou, Dongfang. I was actually featured in the program in Channel News Asia, 35 minutes telecast 5 times. I was invited by Thomson Reuters to be the keynote speaker for the event. I was invited by Bloomberg to analyze Shanghai market. I was also invited by Macquarie Research to do market outlook event. Now, these are big institutions. So it was extremely humbling experience to be invited by them to share my insight. All right? So this is just a brief background, but you know where I'm coming from. Now, when I first started at the time, I looked towards this gentleman. The first person I studied is Warren Buffett, thought to be the best investor in the world. So what happened was that actually I discovered that he actually made his fortune after past age of 60. Okay, and he started investing in the market at the age of 13. Through magic of compounding, he made his fortune after past age of 60. I say, my God. Now, when I'm interested at the time, I already passed that age. He started at 13 now. And I realized that his approach to the market is very different. Right? And most people perhaps will have difficulty emulating. This gentleman, actually, what happened was that his approach is really a lifestyle. It's really a lifestyle. It's not just a strategy. Okay? And he's filthy rich, but he lived like a poor man. But don't get me wrong, he's very generous. He donated most of his wealth away. But it's really a lifestyle. So I find Singaporeans, we have difficulty. Why? Because we are actually tied down by car, especially if you drive car. Car is a wasting asset. And then your children education, if you have children's young age, you realize you spend a lot on their education. This is what my experience, I'm not too sure about yours. The primary school education is more expensive than the university education. That is my experience. So we are all very obsessed, kiasu parents, so we spend a lot on their programs, CCA, build their portfolio. So at a very young age, we're thinking of how to build their portfolio, their profile, build their portfolio so they enter good university, and go to the faculty they want. So I realized that actually we spend a lot, but not like Warren Buffett. Warren Buffett hardly spend one. If you watch some of the interview, you realize he only got not much, he don't carry a lot in his wallet, no. And he like to play bridge, that kind of thing, but he don't carry a lot of money and eat a burger, that kind of stuff. Right? So I decided there could be somebody else that I can learn from. So I move on. Hey, I discovered this gentleman, Sukota. I said, my God, this gentleman turned $5,000, 50 million, 10 years, and that is 300,000% gain. Damn solid. All right, but hardly heard of him. He's not alone. Richard Dennis and William Eckert turned $400 to 200 million in 10 years, and that is 500,000%. All right, and $400 everybody have 200 million in only 10 years. No, I said, this is something more sensible for me. So Michael Marcus, 250,000 in 10 years, and Bruce Kaufner, one of the best hedge funds in the world, 87% gain per year for 10 straight years. I said, why these people hardly heard of them one? They don't appear on television, but there's something common among them which I like. They make money without having to know what happened tomorrow. I repeat, they make money without having to pay too much what's going to happen tomorrow. And this is what I like. So generally, my philosophy is in line with what they do. I don't have bother too much about what happened tomorrow. Okay? So because we have limited time, I want to quickly jump into it and make things very simple for you so they can relate. These are sound basis. Even it doesn't mean simple means it's not sound. Now, do not make things complicated. I go very practical. First principle, according to my professor, first principle. Why market go up? Market go up because money is flowing to the market. Today, actually, our STI go up. Why? Money is flowing in. In other words, liquidity is coming in. Why the market go down? Because liquidity is leaving. There are three major sources of money. Number one, people saving and investing more. People are very thrifty, save, and then go and buy share. This is the first source of money. Second source of money, people, institutions saving money for other kind of investment. There are a few major asset classes. If bond is no good, you sell bond, you buy stock. If gold is no good, sell gold, buy stock. All right. Property no good, sell property, buy stock. So few major asset class, money is floating among them. Third source of money, central bank lower interest rate, increase money supply. Three major sources of money. Now, of these three major sources of money, the central banks is the greatest source. I'm sure you agree with me. Federal Reserve press a couple of buttons, print a lot of money already. Is it correct? Yes, they are the largest source of money. Now, the central bank do not print money and go to the stock market to buy share. They don't do that. Okay? The central bank print the money, all right? Try to stimulate the economy, all right? Try to actually what? Achieve economic growth. So their role is really to actually ensure employment, combat inflation, ensure economic growth. Okay? It is the institution that take advantage of the cheap money, go to the market to buy share to get better return. So because of this, we're interested what the institution do with the cheap money. All right, what the institution with the cheap money, and all these are reflected in the chart. Okay. Now, having said that, you must understand, all right, the big picture is there's cheap money in the market. This is very important. The second thing you need to understand is market is always in an endless cycle. And there are four stages of the cycle. Stage 1 is called basing. Stage 2 is called advance. Stage 3 distribution. Stage 4 decline. It's easier to understand through a diagram. Okay, now this is basing, stage 1, stage 2, advance. You can call it bull market if you wish to. Then you call it stage 3 distribution, stage 4 decline. You can call it bear market if you wish to, and go back to basing, stage 1. 4 stages like spring, summer, autumn, winter, and it continue. And the cycle continue. The next cycle could be taller, shorter, narrower, broader. It doesn't matter. It is always in an endless cycle. Now, never stay in 1 and 3. 1 and 3 don't stay there. It's a waste of time. Okay. Stage 2, you long. Long is not long term. Long is to buy. Stage 4, you sell short. So here, stage 2, you buy. Here, you sell short. If you don't know how to sell short, don't buy. Stay cash. Okay. Now you take a look at S&P 500. In 2003, market was trading sideways, uncertain. Stage 1. And finally, when the Allied forces declared desert storm, okay, remember that time Iraq war, market start to rally. 4.5 years super bull, and then you have stage 3, and it actually went down stage 4. This is your subprime crisis, and stabilizes here, stage 1, 2009. March again, it start to rally, stage 2. Let's continue. So this is stage 2. Stage 3, not too long ago, 2022, US in the bear market. Stage 4, stabilizes stage 1 and stage 2. And stage 3, notice we have a severe sell down followed by a throwback, a bounce, basically a bounce. We are still in stage 3. Now, if you break this low, confirm stage 4. Okay? So just as I mentioned earlier, don't stay, 1 and 3, don't stay there. It's a waste of time. It's just very choppy. This is Nikkei 225, stage 2, stage 3, consolidate, breakout again, stage 2, stage 3, breakout, stage 2, stage 3, right now. Same thing, we are looking for a bounce. This is a very important support. If it bounce all and it break this low, confirm stage 4. Okay, so this is STI. Now this is your COVID, and then we were stage 3 for a couple of years. And then finally break out and then run and break the 4,000. And then of course right now we have this gap down, stage 3. So again, we are experiencing a bounce, and if we break this low, stage 4 will happen. Okay, so right now we are actually long-term stage 3. And of course, by now you understand this run here is dominated by, in Singapore context, dominated by which sector, ladies and gentlemen? Which caused the stock to run up? Which are the stock that caused the index to run up? Anybody? Anybody want to venture to guess? Wrong answer, no punishment one. What caused the index to go up? Which sector? Yes, thank you so much. Teo. All right. Yes, you're absolutely right. The bank, the 3 bank stock rallied together with SJ and Singtel. All right. Bring it out of the what? Stage 3. Okay. So now you get down, of course, because the bank also went down. So whatever it is, market is like that only. Okay. And when you go up, money is going in. When it come down, money is leaving. Liquidity is leaving. Okay. So this is something you can actually find out yourself very easy by looking at the chart. So do you need to ask expert? Don't need. Okay, don't need. In fact, Peter Lynch, you know Peter Lynch, right? He wrote a book called One Up the Wall Street, right? He mentioned before, first thing as a retail investor, everybody here retail investor, right? First thing for a retail investor, what you need to do, stop listening to professionals. Stop listening to professionals. Stop listening to the warheads, talking head. Stop listening to them. It make you more confused only. Okay? Let's continue. First, next, how to position yourself. Ask yourself this basic question. As an investor, as a trader, you got to ask the basic question. Is your investment backed by a sound strategy? Do you have a plan? That's very important. So a lot of people have a plan, but they hop from plan to plan. So it's not consistent one. All right. Everybody has his own whatever biases and inclination and personality and style one. But it must be based on sound philosophy, which is important. And some of these core concepts don't change one. It doesn't matter whether short term, mid term, or long term, it don't change one. But it's just unfortunate. Now, today context, you're worse than before. Why I say this? Because of social media. Because of social media, you have a lot of unverified information. Unverified. And a lot of this so-called YouTuber and all those things, the objective is really to get eyeball. All right, and do they really tell you the actual stuff? Maybe they also do not know, but it doesn't matter. This don't happen to this industry, no. With social media, a lot of industries are just filled with a lot of misinformation. All right, so that really experts have difficulty. Why? Why is it so? Because whatever they say sound very nice. Whatever the experts say doesn't sound nice, but they tell you the truth. So it's unfortunate, very unfortunate. So you find yourself inside Telegram, and today you follow this group, then tomorrow another group, and then what happens? You go every direction, you don't know what you're doing, and over time what happens? Investor lose money. These are general characteristics over the world. 95% of the investor lose money in the market. That is bad news, but good news for you. 5% make money. Because this 5% make hell a lot for 95% for whatever reason, just love to give it to them. And trust me, there are a lot of people out there very happy to contribute. You just make sure that you're not one of them. Is it okay? So make a commitment, be the top 5, top 10% that make money consistently. To help you to understand the context, the lower 50% are the compulsive gambler. This one got no chance. They're not interested in learning one. They're interested in gambling. The next 40% are the people who are a bit more serious. They attend seminar, they attend workshop, they read books, and they use indicators, they have trading system, that kind of thing. They make some lose some, but don't seem to go anywhere. So basically, they can be stuck there for a long while. It is only the top 5, top 10% that consistently make money. This one here, this is the star. So you want to be here. So a lot of people got stuck here for a long while. To realize is very difficult. To achieve the breakthrough is difficult. All right? Because actually it's difficult is because a lot of people may not realize what is important. What is important. And some of the people will ask me certain questions. I know they are looking for something. They are looking for Holy Grail. Don't have one. There is no Holy Grail one. But you notice the social media will tell you the holy grail, this one, this is the best indicator, this is the best, whatever. A lot is flooded one. So people will chase on. It's just a bit unfortunate. So these are the people here will be looking for holy grail. But end of the day, if they're persistent enough, they realize you don't have, and they begin to realize there's something else, and hopefully they end up here. So my objective is to really help people to understand this quickly. This one totally no chance one. Quickly get up here. So where should we focus on? How we actually approach the market? It doesn't matter whether you're short term, mid term, long term. It doesn't matter. The core concept don't run away. Right? Focus on this. If you look at this diagram, what comes to your mind, ladies and gentlemen? If you look at this diagram, what comes to your mind? Now, if you tell me, right, I see motion, you're right. You see momentum, you're right. Okay? So my whole idea is whether you're short term, mid term, long term, doesn't matter. Look at momentum. Look at momentum. Okay? Now, why momentum work? An object in motion stay in motion. Now remember, the motion is not caused by you and me. It's caused by the institution who actually go into the market to buy share. All right. So when the institution moves the market, it causes the stock to move. All right. So emotion tend to actually stay in motion, and they will continue to acquire share. They don't just buy one time, finish, full stop. They acquire slowly, and eventually they become major shareholders. They have to declare. All right. But initially, they hope that nobody notices their action. But up to a stage, you have to declare. And if this stock is still, company still doing very well, you continue to acquire and you continue to stay in motion. Next, stock tend to move in a line of least resistance. Like a car, it's easier for a car to continue to move forward than to stop and reverse. All right, because to reverse need a lot of energy. Like for example, recently the stock reversed. The market reversed because of Donald Trump's sweeping tariff. Without that, it is difficult to actually move it down. It may just gradually move down. It will not do that plunge. Now, next thing, before there's a change in price, there must be a change in momentum. And that really caught my attention. Everybody is interested in change price. But because before the change in price, there must be a change in momentum. And this is important. It's a sequence one. Before there's a change in price, there must be a change in momentum. And before there's a change in momentum, there must be a change in the attitude of the investor. All right. So it's a sequence one. Now, I'd like to show you an example from the past to the present for a simple reason, because you can relate better. Now, I purposely curated the chart right from the past to the present, and later I'll do a demo, which will show you the things that are current. But whatever the case may be, I purposely select these stocks to help you to understand better. Okay? Now, Costco. Momentum work. This stock went up 8,000%, 4.5 years. These are the stocks we traded in the previous bull market. What happened to Costco? Gone. Never fall in love with stock. The lesson is market is an endless cycle, and eventually it will just roll down stage 4. And right now it's still staying in stage 1. Let's continue. AAM. Momentum still work. And what happened to AAM? Gone. Alright. Now this is Tencent. Momentum still work. Take a look. It's still Tencent. Momentum still work whether up or down. Alright. Important thing, never fall in love with stock. Because once you fall in love with stock, you're in trouble already. Seriously. Why I say this? You just ask yourself. Don't have to answer my question, but you just ask yourself. Your greatest loss, is it from your favorite stock? Ask yourself. Is your greatest loss come from your favorite stock? Ask yourself. You realize more often than not, it's true. The stock you believe so much costs you a lot of money. So my advice to you, never fall in love with any stock. Never fall in love with any stock. Because once you fall in love, you color your judgment. And the stock go down, you refuse to get out. You refuse to get out until it's too painful, you have no choice. By the time you get out, you lose tons of money. Never do that. So be very objective, because stock is ultimately a vehicle for us to get return, that's all. Never fall in love with stock. Why momentum work? Natural bias to strong stock. There's a natural bias one. When a company buy a company share, they're looking at one thing. Can the company make a lot of money for them or not? That's all. Can the company make a lot of money? So they are interested in what? Earning momentum. The current quarter must be a lot better than the previous quarter. The next quarter must be a lot better than the current quarter. Because The institutions are very brutal. If the company are not able to do that, they'll park the money elsewhere already. They will move their money elsewhere already. All right? So this is something you got to think note. They will just move on to another company. They are doing well. Even though the company could be profitable, they are not interested. You must have the earning growth. Huh? Now, the technical traders are also interested in momentum, but they are more interested in price momentum. So all the smart people in the world are looking at momentum. To help you to understand better, let me give you an example, a simple example. If you go to a hawker center, which you have never been before, and you're looking for very good food, what would you do? Anybody? If you go to a hawker center and you're looking for good food, assuming you have time, what would you do? Now, everybody got this experience. You look at the longest queue, and this happens to be longest queue, and you like fish soup, you queue. If you don't like fish soup, go for second longest queue, and you always end up good food. Now, after you finish the food, right, there are 100 stores here. You can go and interview the individual storeholder. Now, how you come up with this recipe, how you make your sauce, how you source your ingredient. You can ask all these questions. This is called fundamental analysis. Okay. Now, I'm not against people doing fundamental analysis. I'm not against that. Okay. Right now with AI, you can do fundamental so easily. Is it correct? There's only one thing I know. We can never do better fundamental analysis than the institution. I repeat, we can never do better fundamental analysis than the institution. Why? Because the institution has a lot of manpower, has a lot of resources. They can fly to China to go and visit the factory. They can call up the CEO and ask for interview. Can we do that? As a lone individual, very difficult. But there's something as a retail investor, this is your advantage you must make use of. You have one big advantage. You can see what the institution do with the money. You can see what the institution do with their research. All right? After doing the research, did they buy? Did they sell? Or they do nothing? Because all these are reflected in the chart. All right? These are reflected in a chart. So you don't even have to subscribe what kind of services to know what is net inflow, net outflow. Don't need the chart tell you one. Okay? Clear with this? All right? So my idea is that just look for those with longest queue. It represent sponsorship. It represent institution sponsorship. Okay, maybe the first 5 store with long queue, you go and investigate. The one with no queue, I can forget about it. That means if the stock has no interest from the institution, don't bother. It's a waste of time because without institution sponsorship, the stock can never run one. Okay, next. Participate in a strong sector in different part of the economic cycle. Now, if you're in the market for quite some time, you realize there's such thing called sector rotation. Sector rotation. Okay, I'll give you a very simple example. During COVID, which is the strongest sector? Everybody knows. It's the healthcare. Okay, because we have a health hazard. So what happened was that actually the glove manufacturer, PPE manufacturer, all performed very well and it rarely. And technology stock also rarely because we're confined to our house. We can only communicate using technology, so technology stock rarely. Then after that, what happened? Healthcare stock gone. All right, and what take over? Travel, airline, Genting, the casino, all run very well. Then after that, it ran down. And then AI team came around, then AI stock run. Am I right? And now AI team struggle. Am I right? So there is this sector rotation. Now, if you participate in strong sector at a different part, what happened? You got the highest return, but a shorter time. So it helps you to actually capture bigger profit in a shorter period of time. So in order to look for stocks that have that momentum, so we look at a market leader. All right, I call it the champion stock. Now, this is important. It's just a lot of people cannot relate to the market. 20% of stock capture 80% again. Everybody know the 80-20 rule, but they didn't know it's the same for the market. Which means what? In any market, there is only a few large winners. Only a few large winners. The rest are just mediocre. All right, don't waste your time. So every time I do public seminar, some people, they always ask me stock. And I realize many of the stock they ask has no potential, man. I also don't know why they're interested. So actually, majority of stock actually don't need to see one. Don't need to see one. Okay. Let's continue. Champion stock. Why? Why market leader? Quick momentum move for short-term trading. So remember, the movement is caused by what? Institution. When an institution move in to buy a company share, it caused the ripple. The ripple allows to do short-term trading. Price appreciation over time, mid-term investing. How is this so? Now, stock with the short-term momentum, strongest rather, short-term momentum evolve in the longer term. When the institution go in and buy a company share, It costs ripple. When they continue to actually buy the share, accumulate, the ripple will evolve into wave. The wave allow you to do mid-term investing. And because we are dealing with the same kind of stuff, whether it's short-term, mid-term, all right, and for you to continue to build opposition, what happens? You achieve better consistency, and that allow you to do better compounding. Now, from here on, I want to show you past example right to the present for one simple reason. All right, don't fall in love with stock. Very important. Every stock has its life cycle one. Sometimes the stock is dead, you don't have a second life one. Sometimes it has, but we don't fall in love with stock. Huh? Now, this is Ezon. In 2013, it started to rally 700%. What happened to Ezon? Suspended. Osley 2014 went up 245. This company introduced shoebox performance. People go crazy with shoebox performance and you stock rally. Now what happened to this stock? Gone. This is InnoValue 2015 went up 350%. This company is so good, taken private by competitors. Okay. 2016 CMC Goldmine rally 178%. Because why? At that time, Bank of Japan introduced negative interest rate. And Central Bank of Europe also introduced negative interest rate. So people say, negative, no, must well go and buy gold. All right, and gold rally, and this is CMC Gold Mine. And in case you do not know, this stock recently also run. Why? Because gold hit new high. Sun Power 2017 120. A lot of people look at the name, don't believe a stock like this called Sun Power can be the top gainer. Don't bother. Never fall in love with stock, and don't have too many opinions. Now this is Sunsing 2018 118%. Again, a lot of people don't believe a stock by the name like this can actually rally. 2018 global indicator 300%. Now this is Mentec. Everybody know this is the subprime crisis. Subprime crisis. Sorry, COVID crisis, not subprime. COVID crisis. COVID crisis. Did the market go down? Yes, the market went down, but the stock rallied 1,600%. 2021, the best performing stock is Grand Venture, 300%. A lot of people don't believe. Grand Venture outperform High P, outperform Franken, outperform AM, become the top gainer. Right? 2022, the only blue chip in recent year, Yang Zijiang, 95%. Dynamic 2023, the best performing stock, 75%. 2024, just last year, best performing stock, Oitech. All right. A lot of people say, I don't know this stock, I don't trade. Right? All this you can verify easily one. All right. Important, ask yourself, do you capture any of them? Maybe you capture Yang Zijiang. All right, maybe. All right. But really ask yourself, did you capture any majority of this type of stock? If you did not, that means the way you select a stock maybe need to fine tune. Let me give you a list to draw lesson for you so you understand. 2017, we have AEM 400%, High P 270, Alliance 265, Sunrise 115, Ellipsis 132, UMS 117, and STI is 11.2. Not too bad. But you take a look at the difference between the leader and the broad market. Look at the difference. The difference is staggering. This is only 10, 11%. This is few 100%. The other thing, take a look. AEM, High P, Sunrise, Ellipsis, UMS. This is actually very clear. In this year 2017, it's very clear. If you look at the stock, do you notice there's a pattern? What pattern is this? These are semicon related stock. Semicon, the strong sector. If you do not participate in any of these stocks, then you need to fine tune your stock selection because it's a market leader. All right. 2019, you have global income almost 300, Rex is 272, AEM 145, Banqui 139, Franken 134, High P 73, and SCI is 3.2. Again, take a look. AEM, Franken, High P, these three are same industry, same sector. The rest is all by itself. They are by itself, they move on its own merit. Rex discovered new oil in North Sea. Banqui, they're thinking about what, going private or something like that. You know? Move on it. But this one sector strength is there. Move forward. This is very obvious. 2020, COVID year, Mentec 1004, UG 1003, Jiutian is 600, Top Goods 342, Riverstone 269, iFly is 260. STI is negative 18%. Very bad. All the blue chip went down. Now take a look. Mentec, UG Healthcare, Top Growth, Riverstone. Do they belong to the same sector, ladies and gentlemen? Yes or no? Yes. Healthcare stock, these are PPE manufacturer. PPE manufacturer. But a lot of people tell me they didn't buy this type of stock. Why never heard of this stock? Now, I also never heard of this stock. But I can see the institutional action and we move in together with the institution. Important, don't fall in love with stock. Help me to remember Mentec 1004 if you wish to take a photo of this, because later I'd like to actually do case study so you can understand better. Take a look. All right. Wish to take a photo. I pause it for a second. Best performing stock, help me to remember Mentec 1004. Okay, now fast forward April 2021. Okay, I stop at 21 got reason. Again, I want to draw a lesson for you. Standard Alliance 175, iFast 124, Fortress 100, Del Monte 73, 171, Innotech 67, SPA 63, SCI is 30.2. Not bad after second best after Taiwan. April 2022 is the recovery team after COVID. So you take a look, Southern Alliance, Fortress, recovery team. What is this company? Iron ore mining company. Iron ore mine. Now remember during COVID, construction is actually frozen. Is it correct? After the COVID crisis is over, they remove the circuit breaker and things like that. They have to ramp up the construction. And construction, you need steel. To make steel, you need iron ore. And these two appeared. Now, I didn't know these two stores. I never heard of Southern Alliance. This is the first time I trade Southern Alliance. All right? So, iron ore. Now, the rest of the stock, a lot of people don't believe they can be the leader. Again, you have too many opinions. Now, the next thing I want to actually show you is this SPH. Best performing blue chip. Ask yourself, would you believe that SPH is the best performing blue chip? Would you believe that? Because SPH, everybody know, fundamental not strong. Is it correct? Newspaper readership has been dropping throughout the years. All right? Isn't it? They have to diversify into property sector. And in the property itself, their property portfolio is like rojak like that. Is it correct? How can this be best performing blue chip? But this is true. Best performing blue chip. And later I will show you. All right? We trade stock like this. Let's complete the whole thing. End of year 2021. Grand Venture overtaken 277. Mentec 194. Hourglass 157. iFast 154. Alliance still here. Samudara 121. Pronet 121. STI is 9.1. Okay. 22. Yangzijiang 95. Semcott 69. Keppel 42. Beso 40. Jardine 38. CDR 25. And UOB is 14. STI is pathetic 4.1. Take a look at the difference between this and this. The difference is huge. Now take a look. Yangzijiang, Semcott, Keppel Corp, Jardine, where do they belong? Where do they belong? I'll give you a hint. Something to do with color. Something to do with color. Anybody want to guess? Color of the sky? What are these? You're very modest. Huh? Anybody want to guess? What are these stock? What are these stock? Anybody? Color of the sky? I don't think it's difficult, right? Huh? They are blue chips, right? Isn't it? They are blue chip. They are all blue chip. Yes, thank you. Eunice, thank you for responding. They are blue chip, except for Best World. Except for Best World. Now, if you're interested in blue chip, this is what happened, 4.1, 30 of them. But there are 6 of them here that way outperform the broad market. Remember, it's only 4.1 no. If you didn't buy these blue chips, your return is not going to be good. Alright? So even if you're interested in the blue chip, you must buy the right one. Okay? And a lot of people did not participate in Best World. Best World was suspended for 3 years. They only start trading in October 2022. And in 3 months, it chopped up 40%. No. Did you participate? Help me to remember Semcott. Help me to remember Best World. Help me to remember. If you wish to take a photo of this, because later I'll do case study. Best World, a lot of people didn't buy. Why? Fearful. Again, you got too many opinions. 2023, Dynamax 75, Food Empire 68, 63, Samcorp 56, Capel 55, iFast 53, Franken is 42, Delphi 39, STI negative negative, you know. If you buy blue chip, generally negative, you know. Okay? And a lot of people actually do not believe. This is Franken, no? What happened to Franken now? Gone, never fall in love with stock, okay? Have you remember Dynamic? Because later I'll draw case study. This is just last year. Oita is 300, Bengon 270, Central 14, Dynamic 118, Weher 115, Jaffa 113. Going to be taken private. Yang Zijiang is still there, the only blue chip 100%. STI 17.8, not bad. The last quarter rally, just like Hong Kong. Just like Hong Kong. Have you remember Oita? If you got a chance, I'll show you case study. Centurion. Ask yourself, do you participate in this? Okay. Notice these are what? Small cap stock. The small cap stock team, the team is small cap stock except for one only. For completeness, this is Weher. Again, later I got a chance, I'll show you. For completeness, Hong Kong last year, best performing stock. Are you familiar with them? Take a look at the difference between the leader and the market. 19%, this is 900%. It's crazy, isn't it? All right. Now, you look at the list. Hey, you never heard of this type of stock. Maybe you heard of this. 341%. Portmark. This company distributes soft toy. Remember, people go crazy with the soft toy. The soft toy with big eyes. I don't know whether you know that. You see the vending machine in shopping center. All right. Portmark. 341. This stock is still holding despite the sell down worldwide. No, it's still holding. No. Let's continue. S&P 500 last year best performing stock. Was there a lot of tech stock, Nvidia's and Broadcom? They were airline. You realize aerospace, energy, and energy is still dominating now. All right, the tech stock is gone. Never fall in love with stock. All right, S&P is 24, but look at the difference. 100% is only 24. So knowing the leader is significant. So I want to drill down. You must understand the big picture. Then you drill down to find that stock, okay? You know how to actually trade them. So what is a good trading system? How are we going to approach? What is our methodology? Now, I created a very unique approach to the market, a very unique methodology. It is called expectation trading or expectation investing. Now, what is expectation investing? Expectation investing means before I enter the market, I must have the following answer. Number one, I must know what stock to buy before market open. I must know at what price to buy. Is it $1? Is it $1.50? Is it $2? I must know how much to buy. Is it 10 lot? Is it 20 lot? Is it 50 lot? I must know. I also must know if I'm wrong, how much is my loss. I know the worst case situation and I'm comfortable. And lastly, I must know when to get up. I must have all these answers before the market open. Now, if you have all these answers before the market open, right, how do you feel, ladies and gentlemen? If you have all these answers before the market open, how do you feel? You are calm, confident, and composed. This is exactly what we do. Now, after we enter the market, we look for two actions. Number one, when to buy some more. This is for mid-term investing. You can buy some more. And lastly, you must know when to get out with profit. Most people have difficulty getting out. Right? Most people have difficulty. So this is what we do. Okay, now I just said with you the how. Now I'm not explaining to you the why, which is more important. Why do you think I do expectation investing? Why? Why? Now you see, before you enter the market, you have all control. Is it correct? Before you enter the market, you have all control. You can choose which stock to buy, at what price to buy, how many shares to buy. You have all control. Now once you enter the market take over, you literally lose all control. The only control you have left is to get out. Is it correct? Now, because you lose literally all the control, you experience psychological discomfort. And especially recently, the sell down, a lot of people got stunned. Okay? So they experience psychological discomfort, and these two monsters will rear their head. Fear and uncertainty. Because the future is uncertain, what? Alright? Fear and uncertainty rear their head. And a lot of people are just confused. Now, if you make your decision from a state of fear, if you make your decision from a state of uncertainty, it can never be sound one. And that is one of the key reasons why majority of people cannot make it. To be able to appreciate this is very important. They can understand, but they may not realize how important it is. There's a difference here. They may understand intellectually, but they don't know it. There's a difference between intellectual understanding and intuitive knowing. There is a difference. All right, and you must understand how important it is. But just a lot of people are just not aware. Do not talk about understanding. They're not even aware. So can you understand why majority of people actually lose money over time? Because to be able to appreciate this require courage. Require courage. What do you mean by that? What do you mean? Because successful investing, successful trading is introspective. Can you understand what I'm talking about? Successful trading, successful investing is introspective. You got to look inside, not look outside. Look inside. Now, the whole idea for us to do expectation investing is really, end of the day, to try to minimize this. We cannot eliminate, but we need to minimize. I'm going to drill down further. How to trade the momentum, how to capture the explosive move in stock. How? There are three approaches, but I'll discuss two in the interest of time. Number one, reaction swing. Number two, momentum swing. I will explain the difference here. Now, not all stock will do this. Only the champion stock can do this. Why is it so? Because of institution sponsorship. Now, whoever bought a stock earlier has a tendency to take quick profit. This is human weakness. Again, they don't understand. They tend to take quick profit. People who bought the stock maybe 5 years ago suddenly realized the stock started to run. They decided to get out, break even, because they'll be holding the stock too long already, suffering losses. Finally, recover, they get out. All right. So because of this, there's always this reaction, correction. All right, this correction, this reaction. So this is the correction. This, or we call it the reaction. And this is the action. Reaction, action, reaction, action, reaction, action, reaction, action. We're interested in the bubble. All right, and this bubble is not small. One move like this, 40 cents. 20 lot is 8,000. 8,000 is more than the average salary of an executive. Is it correct? Yes, 8,000 is more than the average, the medium salary of an executive in Singapore. Let's continue. Reaction, action, reaction, action, reaction, action. Very obvious reaction or correction, action. This move like that, 10 cent, 20 lot, sorry. 20 lot is 2,000. All right. Okay, very obvious reaction, action, reaction, action. And sometimes this type of thing run for 20 bar without hitting the stop loss. 20 bar, 1 month. All right, 1 month. Do we have stock like this? Yes, Centurion, have iFast, have Singtel, have Miran. All right. So it's just that you don't fall in love with stock. Okay. Before, in fact, previously we have what? Home Folk. Home Folk did this a few times. And then not too long ago, Rex. Right? Important thing you must know to get out. Okay? So that is reaction swing. Now, some people say, I cannot be looking at the market so closely. It's okay. Look at weekly chart. 1 week, 1 pound. This is ideal for people who want to actually hold it for a longer term and they call themselves investor. It's okay, man. I just call them long-term trader, that's all, because we are not really investor. We are just trader. Short-term, mid-term, long-term trader, that's all. So they like to trade longer, no problem. So here we have reaction, action, reaction, action. 1 week, 1 bar, very slow one. And it's not like what? Centurion, you'll be holding for more than a year, no? Okay, for you. You don't look at the screen in case you think must be very active. No. And in case you think must look at multiple screen. No, don't need. Okay? This is Sam called one of the best performing stock. Reaction, action, reaction, action, reaction, action. Right? And this run itself is impressive. Okay? Now, next I like to discuss momentum swing. Momentums come from motion. We take advantage of the motion. Now, over here we have motion, and here I position myself and I go long here. Okay? Now, people always ask me, why you buy here? Why don't you buy here? Our objective is to buy at the right price, where the risk is the lowest, but the odd is the highest. Is it okay? The right price. And the right price very often is not the low price, and the low price very often is the wrong price. Is it okay? So objective is to buy the right price where the risk is the lowest, but the odd is the highest. Now, if you like the low price, you could have bought here also, right? We don't have high side. Is that low price? Yes. So you bought the low price. Are you happy? Not? No, because it didn't go anywhere. Now, when it moved down, what happened? You're not very happy. Your objective here is to make money. Am I right? Over here, what is your objective? Your objective no longer make money. Your objective is no loss. You're not interested in profit. You change. Why you change? Why you change objectives? You change objectives because you're affected psychologically. Psychologically, you're weakened. When the stock recover to break even, you get out. After you get out, market seem to no run without you. Anybody got this type of experience? So once you understand this, timing become very important already. But of course, we are influenced, just like myself in the early days when I actually read those library books. The mainstream thinking, right, is not timing the market, it's time in the market. That is where you have a balanced portfolio. Now, we're not talking about that, okay? I follow those people who don't talk about this type of thing, man. To them, timing is so important, and they're the wizard. They cannot be called wizard for nothing. Let's continue. Now, I purposely highlight these stocks one. This is curated. All right. People say, wow, CK, you show me an example so old because you can remember better. Olam. Olam was shot down by a company called Muddy Water. Muddy Water is a short only fund. They claim that this company has not been transparent. The way they recognize the profit has not been correct. Meaning what? They inflated the earning. This is a very serious allegation. And Muddy Water had been shorting this stock and the stock plunged. One fine day it was doing this. And I can see the motion here. And very important, I can see the volume. This type of action cannot be caused by retail. It's caused by institution. I position myself here, and when it break, I go long. I have no idea it's going to gap up. This is a bonus. And can you see the volume here? You cannot see, don't know. Institution inside there already. Now, I have no connection with the institution, but the answer comes later. They announced in newspaper, Temasek inject a lot of fund to rescue this company. I have no connections. Nobody I know in Temasek, but I can see their action there. All right? So the answer always comes and it's always too late already. And then the stock just straight sideways. All right? Is it okay? Can you understand? Let's continue. To make sure you really get it, look at the right side. Look at the right side of the chart. Right side of the chart. Is there motion? Is there movement? Ladies and gentlemen, yes or no? I want to help you to make sure that you understand. All right? Now, are you able to see there's a gap here? There's a gap here. General rule of thumb, trade in the direction of the gap. All right, I repeat, general rule of thumb, trade in the direction of gap. Over here, break, we enter. All right. Likewise, there's a gap here. I position myself, but too long, forget about it. All right. Let's continue. I'm not going to waste my time going to buy the stock here. I only position myself only after this, and the stock actually hit a close at 148, and that is the 30-cent move. 20 lot, 6,000. You don't need to be active. You just do the right thing. Don't overtrade. All right. One of the key reasons majority of people lose money, they overtrade. The second reason why majority of people lose money, they buy and then didn't see. Long-term investor lose a lot of money. In fact, the greatest loser are the long-term investor. I don't know whether you know that. The greatest loser, all right, are the long-term investor. They buy and they don't see one. All right. And the other one, of course, the overtrading. Strong inbound trend, I position myself, I buy here. Stock actually hit a high 312, 4 day 40%. This is a $2-3 share, no? 4 day 40%, 1 day 10%. That's hell a lot. Now by this time everybody know, right? CK, I also know. I buy here, sell here, I also know. Buy here, sell here, I also know. Here don't buy, don't sell, I also know. The high side all very clever, am I right? I just know one thing, we can never trade with high side. We can never trade historical chart. No exchange will allow you to trade historical chart. You only trade on the right side of the chart. And from here onward, I'm going to show you example from the past right to the present. I'm going to do a demo to allow you to see the current. I do it day in, day out, year in, year out. I have not changed the strategy. Why? Because I look at the psychology behind the bar, and the psychology of the investor has not changed for thousands of years. Let's move on. Take a look at this stock. IP Over here, we have a gap breakup. Now remember, this is called expectation trading. I have the answer before the market open. I have the answer. The answer is to buy the stock called high P. I know the price. I only buy when it breaks 75 cents. I have the answer. Now, assuming you have the answer, you have the answer. What can you do? You have the answer. You're more prepared, right? What can you do? You can inform your reminder. Reminder breaks 75 cents, buy 20 lot for me. You can inform him beforehand. You can use stop limit order to automatically execute the trade when it hits 75 cents. You can use alert to alert you. All right, SMS alert, pop-up alert, email alert, whatever it is. Now, I always use SMS alert. I have a separate phone to receive SMS, okay? Now, I know the answer is high P. I know the answer is to buy when it breaks 75 cents, and I know it on the 20th July, which is here, this bar. This is 19, this is 20, this bar 20. So I know the answer on this day. So I waited 1, 2, 3, 4, 5, 6, 7, 8. On the 8th day, it triggered. It triggered 9:55, 2nd August. I take a look. Oh, there's a morning gap. Hey, the volume picked up. I go long. The stock closed at 86 cents, and this is a 15% move. Now, I purposely highlight this stock after the gap. A lot of people freak out. They didn't know it. After the gap, this is my first entry. This is my second entry. This is my third entry. This is my fourth entry. By the time I reach here, a lot of people say very expensive, very risky. Anybody here got problem by a high price? Anybody here got problem by a high price? Anybody here? Because I can help you to understand better. Anybody here difficulty? When the price go up, find very difficult to buy one. Anybody? Nobody? Now, according to research, okay, thank you so much, Johnson. The fact that you actually, I really appreciate and admire your courage, seriously. All right, even though I don't know, I never see you, things like that, but to actually to sit so need courage, and it's important because ultimately, remember, trading is introspective, lah. And I like to help you. Okay, now let's assume you bought a stock at $1. Let's assume you bought a stock at $1. This is you. Your friend bought a stock at $1. This is your friend. Now you bought the stock here, you make money. Your friend bought a stock here, lose money. How come? It's the same stock, same price. Never mind. You let your friend buy cheaper, 50 cents. 50 cents. Your friend still lose money. You let your friend buy 30 cents. Your friend still lose money. On the other hand, instead of $1, you buy 120. You make money. You buy 150, you make money. You buy $2, you still make money. How come? Straight away, you know already, it's nothing to do with price. Is it correct? It has nothing to do with price. It's where the price going. Don't focus on price. Focus on the direction of price. Is it okay? Don't focus on price. Focus where the price going. That is the key difference. Once you understand this, there is a seismic shift in your mindset already. Don't focus on price. Focus on the direction of price. Your friend buy dirt cheap still cannot make it. Lose tons of money. It happens all the time. All right? And it's very dangerous way of understanding the market. Just because price cheap and they buy. Valuation low, buy. You buy in a bear market, you are dead already. A lot of people don't understand this. And remember, you're a very nice audience. I'd like to share with you. Past leader seldom repeat. I repeat, past leader seldom repeat. Only 20% of the past leader will repeat in the next bull cycle. Only 20% will repeat in the next bull cycle. All right? The odd is no good. So never fall in love with stock. Don't focus on price. Focus on direction of price. Let's continue. This is high P. I set my alert 73 cents on the 12th of February. It triggered 3 days later on the 15th, right here, this bar. Breakout 1, 2, 3, 4, 5. Sell. Why sell? Because $1 is a psychology resist. This is a logical place to take profit. Number 2, every day gap up, gap up, gap up. It's a bubble, cannot sustain one. All right. Number 3, Singapore control at the time is 5 days. 1, 2, 3, 4, 5. About time already. Get out. There are 5 reasons. I just explained 3 and I'll repeat. Trend exhaustion, every day there's gap up, impossible to sustain. Impossible to sustain. Psychological resistance at $1. This is the convenient place to take profit. Time exit, Singapore contra 5 days. Even in US, there's no contra, but there's a 5-day cycle you need to be aware of. In case there's server selling, all right, you may want to actually get out. If nothing happens, you can hang on. But in this case here, $1 was a psychological resistance. Best to get out. Now, some people look at it, but CK, how come no indicator one? No MACD, RSI, stochastic? No need. I just trade like that. Okay, I trade the psychology behind the bar. And the most I put moving average. That's about all. Let's continue. OSIM. I purposely highlight OSIM. You can never find this chart already. I retain this to help you to understand better. A lot of people actually came to my office for help during that time. Why? They lose tons of money. Why? Because the stock got good valuation, but should be okay. They buy all the way down, they are dead. And the stock was taken private. They lose big time. Very bad. Very bad. So because of this, I show you this example so that you can relate better. Now, I already mentioned already, is there a gap here? Yes. This is a gap down, bearish gap. Trade in the direction of gap. When I see this, I look for setup. My setup is here, 267, 1st September, and I pre-track time. This is very important. It triggered on the 4th, right here, I short the stock plunge. Here we have a gap. Unfortunately, this gap is too big. This is an exhaustion mode. First bull bar, I get out. 37% gain. All right. Now this stock actually stabilize and then eventually break $1. These people lose big time. They don't look at what stage it is. This is stage 4. You can never buy in stage 4. All right. And then what happened? They want to be long-term investor. They say, then what happened? Ron Sim take it private. How can it be long-term? So they lose tons of money, and many of them bought at that time $2. $2. All right, $2. And $2, this sell down, right? This sell down is caused by institution selling, not retail. And institutions are getting out. Why are you buying? And they don't understand. They say good valuation. Okay, unfortunate for them. Lose big time. And what I get out, because this is an exhaustion move, okay? This one you cannot find. Again, I purposely leave it there because you can understand better. In 2015, SMRT, how is the service? How is the service? The service is junk. Every other day breakdown. They are fined very heavily. Is it correct? In one of the occasions, I think it was Orchard Road MRT, the commuter had to actually walk in the tunnel to come out. I said, my God, very serious, right? Isn't it? You tell me every other day got bad news, right? Would you buy the company share? Ask yourself. Every other day, bad news. Would you buy the company share? A lot of people say, I will not. I don't care. Why? Because I trade what I see. Take a look. I set my alerts at that time was 20th November. It got triggered 2 months later. So this alert I set, I forgot about it. But when it triggered 2 months later, I take a look. This is the bar. I go and buy. Can you see this now? The volume peak, it's not caused by retail. You must understand this. All right. And then what happened? It moved up. Can you see this now? Institution buying, insider buying. You don't need to know the counterparty. Don't need. You just need to know how to follow. Answer come later. LTA announced they take over the asset of SMRT. And the stock rally. Who are the people buying? I speculate. Maybe LTA officer, maybe SMRT officer, people who know negotiating, whatever. Some news leak out and then you move. And here I get out. The 10% move. All right. And then after that, I didn't trade this stock again. But to me, I take advantage of this. Now, you can continue to run if you wish to. But remember, we do not set target price. No. I don't set target price. I must know roughly where it is, whether the stock got potential or not. Okay? I will get out when it's time to get out, when there's sign of weakness. Okay? So I get out. Why? Because there's a shift in sentiment. Shift in sentiment. Now, I started to explain because you have been very nice. I like to explain. How do you know there's a shift in sentiment? On the day I buy that time, it's a neutral bar. This is called a neutral bar. And the next day, it's still neutral bar. Potentially can fail one. If you fail, I must get out, cut loss. Then you have a bull bar, 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 a bull bar. This is the first time you got a bear bar. Is there a shift? Yes. I get out. And then the stock retrace. Yes. Are you able to understand this? A lot of people didn't know until I highlight. Venture, everybody know. 1669, 14 September, I put 3 star. 15, next day breakout. This setup is called rabbit in a head setup. Stock actually hit a high here, and I get out. 33%. Now, of course, people ask, how do you know the move that ended after the strong bar? Now, anybody here do candlestick? Anybody here do candlestick? Is this a strong bar? Is this a strong bar? To me, this is a warning sign. So I get out the next bar. Why? Institution selling. It's an exhaustion move. Okay. This is Hong Kong stock Ping An. I set my alert $91, 17th of January. It triggered next day, 18 right here. I buy. Let me explain to you. This is a very obvious resistance. Very obvious resistance level. And here we have a trigger. All right. This is the first approach now. Usually cannot break on. This is the second approach, and it triggered the, and then followed by a gap. A gap. Now this is an uncertain bar. So what happened was I set on the high of this tail, this one here, which is $91, and it actually taken out on the 18th. I go long, and over here, unfortunately, I see the uncertainty. I get out here, no choice. Okay, so how can I tell the end? Because there is uncertainty already, so I get out. If I don't get out, I'll return all my profit. Now we don't know what we trade, what we see. This thing potentially can go up, but unfortunately, there is uncertainty already. I get out. This is very obvious. This is COVID. 270, 24th January, trigger 4 days later, right here. I short, especially after the gap. This is no-brainer. Why? During the COVID, aeroplane cannot take off. Don't need to maintain, right? Is it? Don't need to maintain so much, right? So this is the obvious candidate. And finally, it punched, and right on the left side, there is a support. I close my position right at the bottom here, 45%. This is a very easy trade. And I just now mentioned already, up market, you must be happy. Down market, equally happy. Your friend don't understand why you're so happy when the market crashes. But it's okay one. Now take a look at this Mentec. 29 cents on the 15th of June. Trigger 3 later on the 18th right here. Stop, run, get out 200%. Help me to remember. All right, take a photo of this if you wish to. Mentec, trigger price 29 cents. One setup only here, and the stock rarely like that. Parabolic move. I pause here for a second. Did you buy this stock? Again, a lot of people never heard of this stock. Doesn't matter. Let's continue. This is Hong Kong stock. It is very difficult to find an example like this. 42, 45. I know the answer on the 29th. It triggered on 31st December, which happens to be the end of the year. It's a half-day trading in Hong Kong. The bar that trigger is this bar. The volume is this volume. Half-day trading. Now, even if it's a full-day trading, this volume I double by 2, it's also very low. So I don't want to take the trade. Why? It may be a false breakout. So I decided to only buy if it break the high of this bar. And it happens to be on the first trading day, 4th of January. So I buy when it break the sign. And finally over here, I don't like this bar because this is really abnormally already. So I get out on this black color bar and then it move downwards. And shortly after that in February, this happens to be a peak in Hong Kong. And then from there onward, Hong Kong go all the way down. SPH, you cannot find these charts. This is how we trade. We don't talk only. SPH 129 check long 25th Feb. It trigger on the next day, 26, which is this bar. It trigger. Now there's a pullback. Did not hit my stop loss, fortunately. I finally actually get out here. All right, and this is a 52%. SPH, did you buy? A lot of people did not buy. And this is a very nice move. Okay? Now, unfortunately, it come to an end here. Some people say, ACK never suffered the sell down, man. And this gap down. No, why? Because I also set alert to get out. One that is set, going down, check 16 April. When I get out 3 days later on a 19, I get out. But ask yourself, do you trade SPH? Let's continue. Same call. Here, maybe this one you trade 203 right here. Next day only you break out and the stock rally, and over here I get out 46%. Again, how do you know how to get out? I set alert. My alert usually in big capital letter. Watch to take profit 13 April. 296. I know the answer. 296 get up. And I put that task upper channel line. So you can draw trend line. Alright. And you can draw this channel. Alright. And then it so happen you test this. I decided to get up because there were previous tests before and it was very weak. And finally you can see this is your last chance to get up. Notice the rejection on the high. Fail. This is a trend line break. Go down. Gone already. Went down for 6 months. So same thing, whether get in, get out, prepared, very important. Best world, a lot of people never trade. 215, check long at 20th Jan. When you trigger 5 days later. All right, so I put that app because I bought earlier here, buy some more. And then to get out, I set my alert 253, test high volume resistance. So 253 high volume resistance, I get out, which is this bar here. And then 18% move, and then move down. Subsequently, the stock move up only because they want to take it private. Otherwise, the stock is gone one. All right, so nice. Best in the world. This stock is very easy to trade. I like this stock. Unfortunately, it's gone because the persistency, the move is very easy. Too long and too short. Okay, but never fall in love with stock. So remember, you don't go and hold it when they go down. It's gone already. Centurion just now, one of the best performing stock, 55 cents. Breakout. Here I get out, or rather the close, 45%. For those people who know this stock already break $1, right? Isn't it 120 something? So we achieved two things. So just before that, I show you example from the past right to the present. All right, and we achieve two things. Number one, we know which stock to buy, which stock to sell short, precise entry price. It doesn't matter which stock, which year, it doesn't matter. Every of the year itself, there will be champion stock one. Even lousy market like this also got champion stock one. Okay, and the precise entry price, not agak-agak. Before market open, if you have the answer before the market, is it good or great? You're more calm, more confident, more post, right? Is it correct? Yes. So like people say, so what if I know? A lot different. There's a lot difference between you know and don't know. Okay, let me just show you some of the email that were sent to me. Now, all these email, I never solicit one. I'm very lousy, this type of thing. I never ask to them, hey, please send me email testimony. I don't, seriously. I hardly do this. Some of my staff may do this, but I don't do this. These are students send. You ask yourself. You ask yourself. Complain easy, right? People will say. Compliment people don't want. Unless it's extremely good. Am I right? Now, let's take a look. This is Patrick Cole. 08, bull or bear? Before you say, oh, CK so long, there are good reasons. I'd like to show you this. Bull or bear? Bear market, subprime crisis. Subprime crisis is worse than COVID. Thank you. Subprime crisis, market go down. Thank you, email. I have not shorted the market. I came before in the trading company with the return more than 200%. More than 200% is more than 200,000. I highlight particular for three simple reasons. Number one, 61-year-old retiree. He's not your high flyer executive who play computer very well. Very slow with computer. 61-year retired. Number two, he has never shorted. Never. 61-year retired in the market for a decade. Never shorted before. Number three, when he came to learn from us, that time he came quietly without informing his son. Of course, you'll be wondering, why must get permission for the son? Because the son is a fund manager. Every time listen to the son, cannot make money one. Decided not to listen to the son anymore, but don't want to offend the son, came quietly and learned from us. And during the period with our coaching, he made 200,000. Very happy. Send me this email. He appeared suddenly in my office. CK, I want to buy your lunch. I said, why? He said, then he brought me to a lunch. After the lunch, I finished. Then in the evening, I think it was in the evening, he sent me 6:20. He sent me this email. I was very grateful. I never asked for it. Now, good news, very difficult to control, right? He told the son about it. The son couldn't believe it. Come and visit me. Ask me tons of questions. And give me a name card. Oh my God. CPA, CFA, MBA, one string of degree, but just cannot make money from stock market. And finally became a student. Fund manager. All right. Next, I'll show you this gentleman. His name is Kenny. Kenny is a seminar junkie. That's why I show you, because you may know him. He practically attend all the workshops in Singapore because he's dead serious. Now, he sent me an email again, never solicited. This is 2014, and he said, I attend back in 2011, 3 years earlier. Based on Asia Sharp principle, written pretty decent, very modest. Now, over the 3 years, he got 4 spreadsheets. The last one is an IG account I opened in June this year to focus on short. So the first year, he actually makes 77,000. On the second year, he made 29. Third year, he made 32. On the third year, he got an IG account, he made 13,000, focusing on short only. So over the 3 years, he says he made 153,000. He started with 100,000. All right, so this is profit. So it's 153% over the 3 years. 1 year before the COVID, he came to visit me, brought me mooncake and bid me farewell. He said he's going to migrate to Australia. And during the conversation, he told me that in one of the year he made 2 times annual salary. 2 times his annual. This is a senior executive. I think he make 200, 300,000. So 2 times annual salary means he actually make at least half a million in one the year. And I'm very confident he already make his millions. So you want to work or don't work also never mind. All right, because he actually what? Work on himself, acquire the skill, he can fire his boss anytime. Fast forward 2020. Market go no good. This is from Cynthia. I'm currently sitting on some profitable short, Samcott. Short got S, he only mentioned one, Samcott industry. We short. Right? And I reply her on the trading stop or weekly. I said, got it, CK, thank you for the reply. Really glad I attend your course last year. Got to experience the current market armed with useful knowledge and technique of trading. So bear market okay, okay. So bull market happy, bear market equally happy. So you must make the commitment. When the market crash, you're happy. Your friend don't understand why you're happy. No, she's not alone. This is Sarah Wong. Okay, 2020, lousy market. In my 2 months in the broking firm, I make 70,000. Take a look what he wrote here. On a personal, I want to extend my deepest gratitude to you for putting yourself out there, helping people break through. In my 2 months in the broking firm, which I broke it, I make 70,000. Look at the last statement. I never felt this gratified. I never used this approach. This lady was a fund manager. Fund manager don't use what I use. Different. Because they are too slow. Unfortunately, because their fund is big, they are too slow. They move like dinosaur. So for us, we are nimble. We get in and get up. So in that 2 months at the broking firm, as a prop trader, he makes 70. Very happy. Send me this statement. All right. So the game made a commitment. You have to make a commitment. Nothing happens until you make a commitment. When the market crashes, nothing happened to you. In fact, you are quite happy. And later I'll show you. Okay. Now all these people being able to achieve this result because of this program called Mastering and Processing. Let me just share with you very quickly. We capture short-term explosive move. We capture also the outside game. Right leader for outside game. Now, this is short-term cash flow. This is mid-term capital appreciation. We achieve through the same group of stock, champion stock, the market leader. Okay. Now, in this program, I'm going to teach you how to find the champion stock for long, and for short. A lot of people, champion stock can short. Can. Okay. Timing just right, not too early, not too late, because timing affects your psychology. Trade setup. There are 4 trade setup I'm going to teach you. If you understand the setup, you understand the breakout. A lot of people don't understand this. Okay, trade critical number you must know before you enter a position. If you don't have this number, you're actually gambling. All right, unknowingly you're gambling. No. How to write the champion stock for us? This is medium term. Okay, mid term. Champion stocks comprehensive. You will capture the champion stock. All right, major and short term move. Practical, easy to understand. I make it very practical. All right, you don't need to read a lot. Don't need. All right, when you want to read all those things, it's really for fun only. For fun only. So really, you must know roughly the company what they do lah. The detail don't need one. Require little time. I cut out the time required. All right, I cut down the time required. Now I'm going to do a demo so you can understand. So I'm showing you right now a charting software. This is a charting software that I use. All right, one of the charting software. This is called Share Investor Station. It belongs to Share Investor. Share Investor is the company that organized the REIT Symposium, the Invest Fair. This is the company. This is the software. I just put my stuff inside there. So these are the markets: Singapore, Malaysia, Hong Kong, US got a lot of folder. Let's look at Singapore. 80% of people look at Singapore market. Now, take a look here. You have the swing. This is the one swing, and there are 4 reports. Daily, weekly. Daily for short, weekly for long. Long term. Let's take a look. All right. So you notice apart from all this, what do you call that? All these other stock, you have 2 stock, OKP and NetLink. OKP and NetLink. All right. So here you have NetLink. And notice the date, 16 April. 16 April is when is that? Today. The time, 18:31. 6:30. After the market closed, 1.5 hours later, the report is generated by the server based on the criteria I inputted earlier. So here I have a alert price, 90 cents. Okay. So what does it mean? It means that if the stock were to break 90 cents, I will buy. All right. So I know the answer. Are you stressed? Now, same for OKP. All right, 65 cents. So I know the answer. When it breaks 75 cents, I'll buy. Is it very stressed? How can it be stressed? Okay. Now, let me just show you something so you can understand a bit better, huh? Take a look at these reports. This report is in February. On the 7th of February, I received this report much longer because the market environment was more positive. Yang Zixiang Finance was detected and the alert price is 49 cents. So remember, February 7, 48. So Yang Zixiang Finance, February 2nd, 7th of February, 7th of February, which is here. You can see the date on the yellow, in the yellow box. This is one. And it's 48 cents. Is it correct? This is the one. 48 cents. All right, so I know the answer on the 7, which is here, 7. And the next day it broke out. So I know the answer 1 day in advance. Is it okay? 1 day in advance. So, but whatever the case, I know the answer. All right, 7th of February and 48 cents. I know the answer. Let's continue. Now, this is 27th of February. Yang Zijiang Finance is detected and it's 58 cents. So remember 27 towards the end of the month, 27, Yang Zijiang, 58 cents. So remember it's 27. Here, this is 27. All right, you can see the box, yellow box, the date. And the answer is 58 cents. And I know the answer on this day, it break out the next day. Okay, and to help the students, I have a template. Okay, let me just show you the template. So whenever there's a breakout, the arrow will appear. Whenever there's a breakout, the arrow appears. So you can see there's a lot of breakout, a lot of setup, and a lot of breakout. And then here you must know how to get out. All right. So whatever the case, we know the answer in advance. All right. We know the answer in advance. Now, just now I mentioned about STI. Let me just show you the STI. Now, before that, let me just quickly share with you. Apart from all these reports, Yang Zijiang, I provide support to help people to understand better. Okay, so let me just give you some example. Let's take a look at this. Every week I do a videos for my student. 6th of February. So remember just now we have report 7th of February. All right. So on the 6th of February, on the okay, later I explain, Johnson. All right, 6th of February. All right, remember I have a reports before. Let me just refresh so they can understand. Remember this report is 7th of February. 7th of February. 7th of February. On the 6th, just 1 day before, I did a videos. All right, for my student. One, Yang Zijiang. Despite the stock actually making new high, but it's sluggish. You can see again the series of overlapping bar. So again, we'd like to just observe, perhaps wait for the consolidation to be complete and take out this high here of 314. Now the better bet right now is actually Yang Zijiang Finance. So just now I thought it was Yang Zijiang. So I mentioned in the video that the better bet is actually finance. Okay, let's continue. Okay, notice actually very nice run up with bullish gap and through a series of sideways bar. And this is a contraction setup. Bar high here is 48 cents. 48 cents. So let me just show you again. And this report itself, which I show, is 48 cents. So 1 day before I did the video, 48 cents. So that reinforced. Okay, now let's continue. 27 February. exactly the day which I have the report. Let me just show you. 27 February. Yang Zhejiang Finance mentioned previously that the better bet is actually Yang Zhejiang Finance as compared to Yang Zhejiang. Very nice run up followed by pullback, contraction, breakout, and make successive high. And at this point in time here, we have a small deeper setup. Bar high here is at 58 cents. So 58 cents. So remember, the report also said so. 58 cents, 27 February. Okay, so I do the videos to reinforce. The video is on the 27th of February. So it's very clear. And this is year to date best performing stock together with OKP. Now, just as I mentioned, the SCI index, we have a run, right? Isn't it? In my early part of my presentation, I talked about this SCI index was actually stuck sideways on stage 3, like this. And then it finally ran up, right? So, right? And it was driven by the banks. I think Shertiel were actually saying, banking, right? Banking. So right now, everybody know actually DBS, UOB, OCBC have run, right? All right, they know. Now you know. Now, of course, right now we have a gap, Did you participate? Did you participate? Let me show you, Because talk, everybody can talk one, 7th of March. 7th of March. 7th of March when? Not the recent one. 2024. Okay? 2024. Below this low here, which is a 686. Let's take a look at the three bank stocks. Mentioned previously that actually the three bank stock actually map out very obvious consolidation patterns. It is quite evidence to look at weekly. On the daily charts, it's probably quite messy. All right, so take a look at the weekly charts. So this is what happened. Now, after this sustained break, there's a pullback. Look for decisive break above this high here, 34.26. Now remember this bar, this black color bar, and I draw a triangle. Okay, I'm going to show you DBS now. Remember, it's last year March, not recent March. Last year, not 2025. This is the one. Okay. Now, this is where I draw in the videos. Okay, and I did this. Now I'm going to enlarge this thing for you to see. This is the black color bar. This one here. All right, and this black color bar is this one here. All right, look for a break. Okay, and that is last year March. Last year March, and it rarely. You think about it, this move like this, is more than $10. No, more than $10. Let's say you buy only 2 lots, you buy only 2 lots, 2 lots only, How much you make, 20,000, no. And along the way, it gives 2 dividends, 54 cents, no, $1 no. All right. Now, in case you think it's just like that, let's continue, OCBC. Again, you map out a consolidation patterns. All right, look for decisive break above this high here, which is at 1345. Look at this, look at this pattern. We look for a break. March last year, no. Let me just continue. OCBC, So this is not high side, This is done every week, and it's here. You see this one? It's run. Now don't need already. You will need some time to stabilize one. So I do this to help the students. Now I like to actually do a case study. There are just too many things to actually share with you. All right, because we have limited time. I like to actually show you a case study. So you can understand how I actually do those stuff. Okay. The case study I want to do is actually we her. Okay? We her. And from there, I want you to actually be able to appreciate and then learn also. Okay? And that is on 13th Sep. All right, which I did the video for We Her. All right, so here. We Her. Very strong upward move. Notice there's a huge gap here. This provides some level of support and follow. Despite this strong run up, the pullback is actually quite shallow. I would prefer if the stock can trade sideways, close out of daylight, because any break on the upsides is likely to be limited. So if the stock can trade sideways, close out of daylight, look for eventual break above high of 325. 325, but I prefer the stock to actually move sideways first before it break up. Huh? So remember, we heard 325. So the stock actually moves sideways. 325 is here. All right, 32325 here. All right, I did the video that was here, and it broke up. All right, it broke up. All right, so I did it on the 13th, and it broke up a few days later. Okay, remember this bar? Now, did it stop that? No. Let's continue. 10 October. All right, 10 October. I did a video again. So every week I do. Would like to see a convincing break above this recent high here, which is at 49 cents. We heard same thing, run up very strongly. So remember this was the earlier setup. It's right now consolidating. I'd like to look for a decisive break above this high here, which is at 375. 375 very clearly. All right, so we are looking at it, and so we set alert. So this type of thing, you can actually prepare set alert. This is what, 375. All right, 375. So I did the videos on the 10 October. All right, 10 October. Right, 10 October is here. So I waited 1, 2. On the third day, it break up. So this is what happened. And the stock run up. Okay. Now, this is something that I want to actually show you. Take a look at my posting here on this day, which is 24th October. We heard stock trade a long dated doji. This one here, I indicated with a morning gap. Very high volume. See, I indicate high volume. It does not inspire confidence. It is advisable to actually lock in some product, closely manage the balance position. How the stock perform in the next sessions is likely to set the tone for the day. So it does not inspire confidence. What come to your mind? Is this serious? Of course it's serious. You must watch closely already. All right. So this is what happened. The next day it didn't close open well. Gone already. This type of thing you don't bother like that. Not very happy one. We only interested in this type of thing. We are not interested in this thing roller coaster. All right. It is not something we like to do. Okay. It's not good for your heart, your spirit, and your soul. Clear it is. So this is what I do. So what happened was that I've been doing all this thing for the student. Let me just show you at the interest of time. You do the same thing, S&P 500. All right. Because you got 10,000 worth stock. You're spoiled for choice. Same thing. Now take a look. This is daily long. This is weekly. Sorry, daily long and daily short. See the short so long. So mean the stock, a lot of stock stress already. Now this is the long. Long so short only. So straight away you know the sentiment of the markets. But there are still stocks that actually can move on. Take a look. Then suddenly you realize, new more. What is it? Gold related one. This is gold related and you got answer 5586. Then here the answer. This is called small deeper setup. All right, the answer is actually given and it's called a small deeper setup. See the one there? So these are the things we actually know. Okay. So likewise for this, these are stock that actually run up. There is a setup right now. This stock raw stock, there is a setup right now. All right, that is a setup. This is called a small deeper setup also, and they got alert price one, small deeper setup also. All right, Coca-Cola is also there. United Health, healthcare stock is right now strong. Okay, and that's a setup. Okay, and this is not drop. This is the what? Defense industry. This is also strong. Okay, so that is a setup here. All right, in this case, this is a contraction setup. So all this thing here, we know in advance. It doesn't reach market. Hong Kong market, likewise. Okay. Australia market, Indonesian market, Thailand market, whatever market, it's the same thing. Why? Because it's psychology lah. Alright, it's the same. It's psychology. Just want to answer the questions by Johnson. Okay, so Johnson, where do I get out? This thought this is very obvious one. Okay, since you are very nice, let me just remove everything. If I were to draw a trend line, are you able to see that this is generally hugging the trend line and these bars are not hugging the trend line? You can see now. Johnson, okay? Are you able to see that this is hugging generally the trend line and these did not? Can you see not? Can you understand? Okay, good. So it's telling you something is cooking already. There's a shift already. Okay, you must pay attention. Then this bar here is the risky bar. You must get out this bar. Worst case, you get out this bar. Now you break the trend line. Now this is a test. That's all. It may roll down, no? Just be careful. This stock you cannot trade unless you hit and run. Unless you hit and run. So the best time to get out is here. The next best is here. All right. This is of course bad. This is hit the trend line. But you can tell already there's a different. All right. There's a different change in dynamic already. Now, did I actually use any indicator? Don't need. The most I only put moving average only. I already show you already. And to help the student, there's a breakout arrow. Huh? Now, there's something more important. Okay. If our chart, I'll show you more. Just like I mentioned during COVID, right? During COVID, there was a stock that ran 1,000%. Can somebody tell me what is the name of the stock? Start with M1. No. During COVID in Singapore, just like I show you, take photo, Zoom, I know. All right. Yes, thank you. Mentec. Now, why I purposely highlight? Because a lot of people say they didn't trade. I again want to change your mindset. Very important, because if the mindset don't change, the result is the same one. You need to be open. And that's why I show you so example, right? It is not just show a high side. No, I did a video one. No. All right. So I like to show you this also, because talk everybody can talk. I can never go back and do the video because the chart progresses one. Okay. You understand this? Now here. Mentec 17th of June 2020.
Now, Manta had quite similar patterns as Riverstone's run-ups, and right now it's just hugging below the resistance level. Like to see break above the high here of 29 cent.
I mentioned 29 cents on the PowerPoint. I asked you to take photo. Is it correct? 29 cents? This is how the stock actually, there's only one setup here, this run. And the stock just run parabolic 200%. If you miss this, this is really wasted opportunity. Now the second setup came in later on, 30th July. This is another cycle.
Mentec, this is by far the best performing stock this year in terms of percentage gain. Notice this is what I mean by a sharp collapse in price, and usually tend to trade sideways, very much like what we have seen here, right? But right now it's actually attempting at this resistance here. If you can pull back from here, that'll be good, and eventually take a short at this recent high here of 965.
Precise one, not agak-agak. 7 August before National Day.
Mentec, this stock has run ahead and is experiencing pullback the last two sessions. Again, to be good if you can just trade sideways closer to daylight and eventually look for a break on the upside above the high of 105. Important if you can stay above $1, which is a psychological resistance.
So this is how the stock actually traded with two setup. So you see, one time correct, maybe luck lah, two time correct, maybe coincidence. Three time, four time, five time, this is not luck, this is not coincidence, this is skill. And this skill you can acquire one. All right. In fact, with all this answer that we know beforehand, and the video which I do, the support, the posting, you can see why so many students are so happy. In fact, one of the students posted in the forum quite some time back. He called the video the 4D video. I said, this is not 4D, like this is for you to learn. But he said, CK, every week I make money. It's like strike 4D lor. Now this student eventually sent me a message, and he said, CK, I'm financially free. So I was surprised, no. Huh? What do you mean I'm financially free? So he sent me the statement. He makes 745,000. So he quit his job. He was a teacher. He quit a job, and on the side he just do tuition, and he can more actively trade the market. I was happy for him. Now to him, 700,000 is good enough, right? Because he's not married, he got no girlfriend, he got no car, he just stay with the mother. Okay, good enough, right? And I'm very happy for him. Now let's take a look at some of the feedback from other people. This is Yo Boon Huat. High flyer executive, eventually run his own company. I wish I come in 10 years ago, pay CK 3 times the tuition fees. Why you want to pay me so much? Because he can get back 100 times for the market. What? So it's more important your return. He can get return 100 times. So what's the point you pay me 3? No problem, pay me 3 times. What? Okay. Now this is Olive. I purposely highlight Olive. Why? He's a retiree. Must attend, not 1, 2, 3 exclamation mark. No regret coming. Very grateful, very thankful. These are the words that inspire me to help my student more. Now, this is Lee Chun Long. I wish I come in earlier. Those younger than me, you should come. Those same age as me, no excuse, you don't come. Those older than me, I don't know why you still don't come. I'm 21 years old. Anybody below the age of 21? Don't have. And he said, I don't know why you still don't come. To him, this one no-brainer. This one must come one. Now, of course, somebody will say, but CK, this one, the greenhorn, 21 years old. You're in the market for decades already. This one, greenhorn, no nothing. Okay, never mind. Let's take a look at this gentleman. This is William Mock. William is a prop trader. So what's a prop trader? Proprietary trader is a professional trader in the broking firm. They trade with no commission one. One tick, they make money already. So they trade very big one because they got a very big account, all right, given by the broking firm. But they have to share the profit with a house. And this person has been a prop trader for 17 years before he attended my workshop. And after I attended my workshop, he wrote this that must attend. Now, if my program is good enough for a professional, is it good enough for you? I'm sure it does. Now, let's take a look at this gentleman here. Now, look at his face. Do you think he's a local or foreigner? Very obvious he's a Caucasian. He's a foreigner. His name is Sean Ring, an American citizen. He happens to be a chartered financial analyst trainer. Before that, he was vice president Credit Suisse. By anybody's standard, this is an expert from the industry. And if you want to be an analyst, you need this qualification, chartered financial analyst, happens to be a trainer. And the trainer attended my workshop, which I find most unusual. And then after the workshop, he wrote this, I wish I was taught 10 years ago. I said, my God. CFA trainer said he wish I was taught 10 years ago. Means what? CFA got no much value. As far as making money from the market, CFA not much value. If you want to be an analyst, okay. But if you want to be able to make money, perhaps this qualification is not necessary, because I didn't say it is the trainer that said. All right. Now, a lot of people say we must attend the Amor class. No, the Amor attend my class. This is not the only one. There's one here. This is a Norwegian. This is French, and this is British. There are 4 Amor in this class. Now, a lot of students, right, after attending the course, they all regretted not coming to the course earlier. This is the only regret, not coming to the course earlier. And this last one here is the reminder. And he screamed, no. And a lot of reminder doesn't know how to trade. They know how to do the order taking, but they don't know how to trade. It's just unfortunate. A lot of people think the reminder know how to trade. No, because a lot of my students are reminders. Now, a lot of people attend webinar, they always give you money get. I don't like to do such things. Even my hair stand. How to guarantee one if you don't even look at the chart? How to guarantee if you don't even look at the report? All right, do your homework. How to guarantee? This sales gimmick. I don't like to do that. But I give you a different kind of guarantee. I guarantee you after the finish the workshop, right, you regret not coming earlier. I'm sure this is a better guarantee. Now, your investment is 2,398. You own the program, all right? If you think about it, it's only $200 a month. $200 cannot be too much, right? If you're an investor, if you're a trader, come on, cannot be too much. Come on. It is cheaper than your children tuition fee, cheaper than the school bus. Is it correct? All right. If you think about it, it's only a meal a day there. A meal a day there. All right. So it cannot be too much, right? If you invest your own success, cannot be, right? So let me recap. Your investment 2,398 and it comes with a guarantee. Regret not attending earlier. Good or great? I didn't say this. My students say one. Take note of this 3 days. It's coming up very fast. All right. This is our last webinar before that. 23rd April, 25th April evening, 26th full day. Now, first day foundation, I'm going to teach you market cycle. You have to understand the market cycle, the characteristics of a sideways market, you must understand. You must understand the characteristics of a running market, you must understand. If you don't understand this, where you are in trouble already. You must know where you are, understand? So I'm going to teach you this, okay? On the second day, I'm going to teach you the trade setup. If you understand the setup, you understand the breakout. This is where you get exact price, which I did in a video, right? Which I show you the report here. You will know the exact price. Is it $1? Is it 105? Is it 150? Whatever it is. You know, because you have to physically determine it. In a workshop, I'm going to guide you. All right? On the last day, I'm going to teach you trade management. Very important. There's no point having a strong trade, but don't know how to get out and return all the profit. All right? And remember, there's no proprietary indicator, only moving average. Now, if let's say you got 5 stocks, how you rank them, I'm going to teach you. Just now in a simple video, I mentioned Yang Zhejiang and Yang Zhejiang Finance. I mentioned the better bet is Yang Zhejiang Finance. And the bank, I always talk about the strongest one, which happened to be DBS, OCBC, and UOB is the last. All right? How do you know that? Here, improving the odds. All right? And you think of indicator, don't need one. Looking at the bar. Okay? They know these 3 days. Coming up very fast. All this is to make your portfolio magical. That's the whole idea. Now, at this juncture, somebody will say, but CK, there are so many educators out there. I also don't know whether this thing is suitable for me. I also don't know whether I can understand. I also don't know whether your support go or no go. I can understand. I only can show you what my students say. Okay? Now, this is Jervis Lau, 2014, 10 years ago. The arrow at the time mentioned it is monthly coaching and it's debrief. All these are the support. He told us a lot of time, set triple alert, must monitor this stock. When trigger alert, really follow setup and just buy in. Really thankful to have joined Asia Charts and learn from CK. This is exactly what I show you on the video and the report and the posting. All right, now here. The only course in Singapore provides so much support to make sure you get back your course fees. The only course. This person must have attended a lot of courses, right? Otherwise, he said, how come the only course? Okay, let's continue. Fast forward. Zen Tan. Although I attended other courses elsewhere, CK is the only one that provides support after course. I've been doing this consistently for more than 10 years now, every week. My video, very straightforward. No cock and bull story, man. So a lot of people like to talk about story, background. Don't need, I go straight to the thing. Okay, so save your time also. Take a look. Kudos to his dedication all this year. All this year. He's talking about the support. Got hired as a trader with a profit. Really grateful. And these are the words that inspire me to help my student more. Fast forward. Jimmy Yap. I won first money my Channel News Asia Stock Challenge. Thanks CK. This one is a grab screen that students sent to me. Cannot block from television screen. Alright, this is my student. And he came in first. It was given $10,000. He insists on buying me lunch. I'm wondering whether I commit up. He insists on buying came to my office, bought me lunch. All right. And I'm extremely happy for him. Nobody say it best than the recent batch of students. His name is Yao Te. Must attend course, even borrow money from loan shark to attend. According to Mr. Ng, this is non-negotiable. This one must attend one. Now, Mr. Ng is very rich, but he emphasized this. Even you have to borrow money must come. He came with the buy, pay for both. Pay for both. Now, all these students has in the past made a simple decision. They decided to be the 5% that are successful. They decided to be the 5% that do not gamble. They decided to be the 5% that win consistently. In order to win the race, you have to start the race, but you don't have to be great to start, but you need to start to be great. And all you need to do today is to decide that you want to be successful. Nothing will happen until you decide. Is it correct? But once you decide, you notice your mind become very clear. And you experience inner stillness within yourself. Everything seems to be very calm. And everything will align to support you. Yes, it's always like that one. Everything will be aligned to support you. Now remember your investment is 2,398. But for today, you don't need to pay this. You don't need to pay this. I got good news for you. Why? Because this course right now is recognized by IBF, accredited by IBF, Institute Banking Finance. So what's the implication? The implication is this. If you're Singapore citizen, PR, Singapore citizen below age of 40, they will sponsor you 50%. So you don't have to pay full fees. You pay half price plus GST. Good or great, or designed to help you. Not only this, I got further good news. If you are Singapore citizen above age of 40, you got more sponsorship, 70%. You only pay 30, no? Plus GST, 858. Good or great? All designed to help you. 2 years ago, all the students paid 2004, no? 2 years ago. Now you only pay a fraction of this. I have further good news for you. If you still got skill future, not the mid-career one, skill future, you can use it to offset. All right, and if you still got the 1,000 you're not used, you pay 298. If you still have, you pay nothing. Good or great? All designed to help you. Now, if you take a look at the chat, just look at the chat. P. Tan mentioned that. P. E. Tan, thanks, CK. I have to leave now. I've taken the course end of February. Highly recommended. This is my student. He came in again. Perhaps you want to refresh. Highly recommended. All right. So right now here, especially if you're here, you pay nothing. Good or great, all designed to help you. What you need to do is take out a phone and scan this QR code. Now, if you're on the computer, the most convenient, there is a link there on the chat by post by the cyber code. All right, the chat there, the link, this link. All right, you see the MES 2025. Click on the link. You'll come to this page, fill up the detail. Very simple. Your name, your email, citizen, all right, and NRIC, contact number, date of birth. They need to verify this is government money. Continue and then click skill future and click submit. Is it okay? All right, click. What happened? Got distorted. Okay. So from here, you just click submit. Okay. Now, meanwhile, if you have any questions, please type into the chat box. This is a rare opportunity because it may not be there all the time. Because ultimately, you must understand, this is a sponsor for IBF, and eventually it will be removed. We do not know when. It could be tomorrow. So you don't want to miss it. Now, if you have any questions, all right, please take this opportunity. Type into the chat box if you have any questions. So I'll just pause here for you to complete the form, but it's very straightforward. If you have any questions, filling the form, just let us know. So remember, after you submit, right, you will receive auto-generated email from Cybercode with the enclosed PDF copy of your registration form. All right, so your auto-generated email you'll receive from Cybercode. So I just pause here. So if you have any question, please take this opportunity to ask. Now, the other things I like to actually highlight, I'm not too sure you have any questions, but I like to actually highlight this. Recently, we have a sell down. Well, recently we have a sell down. The sell down must be a good thing. You must see it this way. Okay, let me explain to you using simple example. Still on the debrief videos. On the 17th of January, remember right now we are April, 17th of January. Sets, very obvious distribution patterns here. Now we just have to have some patience. I'd like to see it eventually break this low here, which is at 356. 356, where was that? January, now it's April. Here. So you notice January, and it went all the way down, and this is the recent sell down after the US announcement of the tariff. This sell down is a bonus. So you must see this way. The sell down is a bonus. All right. So is the sell down good thing? It is good. It's a bonus. Where to take profit? The support here, right at the bottom. But you shorted already since January. Are you okay or not? Yes. You have to see this way. All right. So your attitude towards the market is very different. Your friend don't understand why sell down you're so happy. And it's don't just like that. Look a look. This is 27th of March. We're now in April. Take a look what I told the student. Take a look what I told the student. Grand Venture, these stocks begin to exhibit weakness after the run-up. So we notice actually it have taken out the support. So this is something which we do not like. Perhaps it's for short right now. This is a contraction setup. Bar low here is 775. 775 to short this stock. Now when I did the video, this is only March 27, Grand Venture. The short is here. See the plunge now. Again, take profit at the support, So from here itself, you straight away will recognize already. Yeah, you can use warrants lah. All right, you can short or you can use warrants or option, put lah. Okay. So important thing is this, can you recognize this or not? I already told the student already. So what happened was that when you have a very severe sell down, is it a good thing? It is good. It's a bonus for a bigger profit. All right. So a sell down is a setup for a bigger profit. So once you have this, you can see just how I show you the example. All right. Apart from Kenny, the rest of the examples are happening in a lousy market, and people say thank you. So you must have a seismic shift eventually. When the market go down, you are very happy one. All right. When there's a terrorist attack, right? If for some reason you benefited from it, I'm not saying that it's good to have terrorist attack, all right? But you actually benefited from it, okay? It's not because of anything, because the market conditions show it's lousy already. A terrorist is just like now, okay? It's a catalyst, that's all. So once you actually understand this, right, you don't agonize. So I hardly watch the news, or in case you think, I look at Bloomberg News every night. No, I don't. All right, as I already told you, I follow those traders, don't need one. All right, because the weakness already happened, I already show you. Sets, if you know sets, many people recommend to buy one. Is it correct? Ask yourself, is it correct? A lot of analysts recommend to buy. Newspaper journalists, financial journalists recommend a few times to buy. Is it correct? And I tell students to short the stock. Now, I just see the institutions are selling. Institutions are not interested. That's all. Can you learn this yourself? You can. Do you have to read the newspaper to actually find out whether good or no good? I don't. All right? In fact, most of the find they are wrong. Clear with this? So Robert, you can actually use, all right, if you're familiar with warrants and options, yeah, you can use the put warrants to put options. But nowadays, I seldom use the warrant. All right, but Hong Kong warrant is not too bad. All right, Malaysia warrant is not too bad, but Malaysian warrant is actually meant for long only. Okay, then US you can use the put. Huh? All right, so anybody any questions? Completed the form, so it's pretty straightforward. So use that particular link. All right, the link, this link here, which is posted in the chat, and just complete this, and you should receive an auto-generated email. All right, you submit. Now the other thing I want you to highlight, just in case only lah. Now you're supposed to pay 858, assuming you're above age of 40, 858. Let's say assuming you only have skill future credit of 500. So there's a balance. All right, there's a balance of 358. So this 358 you have to pay cash lah. All right, so skill future you claim 500. So the balance you pay cash. So what you need to do is just come to this form, use any of this option here. All right, there's a link. All right, just click on the link. Click on the link, and then you make the balance of 358. Okay. Now remember, the workshop is coming up very quickly, and I think it's important not to miss it, because why? The sponsorship can be removed one. If you remove, we revert to 2004. No. So all the students I show you one, right? They're all pay full price one. Pay full price one. Now there'll be people who say, "Oh, I'm not too sure lah, because actually I'm new. I don't know whether I can handle." I can understand, because these are the common questions also raised by my students before in the past. Okay, but no issue one. Oh, no issue. So this one here is Tan Kim Piao, all right. And this student pay full price. Simple to understand, even if you don't have any knowledge. Even if you have no knowledge, yeah, no problem, man. All right. So we make it simple, and then we have recent batch of students. I already mentioned it happens a lot, one. Conrad Chiu, which I attend 10 years ago. All right. Students always say this type of thing, which I attend long time ago. Okay. Now there will be people who maybe have attended many courses. All right, but I can tell you one thing. All right, there is a difference. All right, it's not going to be the repeat of what other people have done. Now I'm not too sure what other people do. I only can tell you what my student actually felt about it. Oh, what happened is click. I don't know why it's like that. Just give me a minute. This is Wu Tianxing. And Wu Tianxing actually wrote this. This is not found in many seminars and webinars I've attended. The trainers give new meaning to insight to the things we learned in the past, which may not be correct. This is very serious, though. This is very serious, isn't it? Very serious. Okay. So even though you have attended courses before, I think this is a course that you cannot miss. And I like to actually just conclude. I just want to conclude. This is from the recent batch of students. This is Lim Tian Siu. If you're looking for true TA course, the word is true. To better your tradings, right? This MES course you should not miss. It helps to better my trading. This is a very experienced trader based on the question he asked. Very experienced. Very experienced. And he said if you're looking for true TA course, that means that he can actually grade which is really solid, which is just normal. And this is from an experienced trader. All right. So if you are new, all right, if you're looking for breakthrough, then this 3A course, true TAs cannot be wrong. And if you are new, it's important to start with something true. All right. So if there's no questions, we will open the meetings for another couple of minutes. All right. So, but if you have any burning question, take this opportunity. This will be our last webinars before our actual workshop. So you don't want to actually miss it. All right. Because the next one will be actually a couple of months from now. So it's important to take advantage of this. So right now it's 9:11. We'll probably open for a couple more minutes before we close. Now, if you wish to contact us, all right, Sabo called Eddie Tan. This is his contact number. Press option 1, you go to his handphone. If you wish to write to him, this is his email address. His colleague is Justin Tan. All right, likewise, you can contact any of them. All right, thank you, Robert. Yeah, look forward to seeing you in your coming workshop. All right, if there's no further questions, I will close the meeting.